Welcome to the True Secret Sauce series. We are continuing with the segment on monkey bars. Just to have a quick recap, we learned about the value area, point of control, etc. Now let us apply it to our trading and see how effective it can be. I'm just going to go with support and resistance. This is far more powerful than the routine support and resistance that is used in other charting mechanisms, and I'm going to show how point of control serves as a good support or resistance. Here is a chart. This is actually, by the way, 180 days 4-hour chart, and you notice that lot of trading has happened in this box. And if you notice the point of control, so many point of control is just overlapping in this range. Recall that a point of control is where maximum trades happened, and naturally those traders have an inherent interest in keeping the prices above. Now look at these charts. This is exactly what I was talking about. You have a thick congestion of point of control. So in this example, if you are going to go long that stock, the line below that I marked in red can be a good stop loss point. This I'm assuming that you are buying stock. If you are an option seller, much better. This could be a nice entry to sell a put or a put spread, because you know that the chances of it coming down to this point is relatively less, and you can collect a fairly good premium because you know that there is a good resistance around this point of control. Now let's look at poor high and poor lows and what it means to the trading. This is how a good chart should look like. Both at the top and at the bottom, it should just have single prints, and it should curve elegantly like a bell in the middle, and this is a perfectly good chart. This means the price tried to go down, it didn't go much, then the price tried to go up, it didn't go much, and there was a fair price. Let's look at this chart. This is a classical example where it does not have the clean finish. You have 3 prints at the top, and so it makes a poor high, and 2 prints at the bottom, which makes a poor low. So what does that mean? A poor high or a poor low is an early warning sign that higher or lower price is ahead, at least for a short term. Look at this. This is a good example where there is a poor high and a poor low. I didn't mark the poor low here, but there's a poor low. And what happened? The very next day, the price breached the poor low, even though the stock actually had closed here. The yellow orange mark is here where it closed, and this is where it opened. Even though it closed at the upper end, next day what happened? It breached that at least for next few days. And at the top you had a poor high, which was an early warning sign, and what happened? A couple of days later, that also was breached. So here, this is another good chart. If you notice it here, there is successive poor lows. This means low prices are not far away, and these prices have to be breached pretty soon. And now on the flip side, you see there's a poor high as well, successive poor highs. So higher prices are not far away. This is a classical example of a confused market, and you got to be a little careful when you trade a position that chart that finishes with a poor high or a poor low, just like this one. Now I want to show a clean bullish chart, how it should be. I would call it having a clean buying tail, value area moving up, point of control moving up, and I'll just show you in a chart. Here, this is an excellent example that, notice it here. First, it opened at the bottom, and then there was a quick buying tail, which means what? People assumed that higher prices are ahead and they started buying it. There's a buying tail and a value area is formed here. What happened the next day? The point of control has again moved up, which means what? Now customers who were happy with this price, next day they're happy at this price, and the very next day they're happy at this price. So which means right now you can go long this position or stay aside, but no shorting or not doing nothing that is bearish, even though the price is moving up. And see, more powerful is the value area is here. The next day the value area is not even overlapping, it has jumped completely outside the previous day's value area. And what happened to the next day? Again, the value area is almost outside the previous day's value area, little bit of overlapping, and the point of control is clearly moving up. There are buying tail after buying tail. This is an example. If you look at the Bollinger Band and RSI, who knows, it might have been having a position where it says you can go short, but this is a warning sign that you cannot get short this market. I'm just showing, just because I showed a bullish chart, actually all my description has been bullish, because at this time of recording market has been an ultra strong bullish market and there are not much examples on the bearish side. So I'm going to show you, because there will be a day when I can find plenty of bearish charts and little bit of bullish charts. Here is a bearish chart, a classical bearish chart where there's a selling tail, the next day a selling tail, the value area is outside the range. So this is a good bearish chart. In this chart, if I see a chart like this, I can go short. But remember, most stocks follow the direction of the market itself. So you got to take everything in a context. In SPY example, SPY is the index. So I'm going to show the chart of SPY, maximize. All the 200-day, 100-day, 50-day, everything is moving up. So which means the market is in a bullish mode, and you have to be very careful when you are shorting anything. So the chart I showed you here was a clean selling chart, and I'm going to show here that chart was caterpillar. Notice it, this was the chart I was showing. It fell, but the overall market is bullish. Even though this chart happened, what happened next day? It fell, but at some point of time people said it's enough, small buying tail has formed and it jumped, and now it has almost reversed the complete downtrend. So you got to be careful as to what it always, when you're trading individual stocks, you got to be ultra careful with the direction of the market, because when the market goes up, each stock moves, some of them move faster than the market. As an example, it might be Amazon in this context, where if the market moves little bit, Amazon moves much higher. Some stocks may not move that much, but when the market crashes, everything will fall hard and fast. I'll stop it right now here, and I'm going to go to the next few other areas in the next video. So happy and safe trading.